Hi, it's Martin again with our Why Tokenization series. Today I wanted to talk about one peculiar advantage of tokenized assets. In short, it would be an option to access secondary markets. To be more precisely, to access decentralized exchanges or decentralized exchange protocols like Uniswap, SushiSwap, PancakeSwap. These are names of protocols on particular blockchains which allow to let's say fulfill the role or need of a secondary market. Why this one thread is so valuable for both investors and the tokenized asset issuer? Because it's an advantage for investor that he can exit or partially exit his investment before, let's say, reaching some state. So if I invest in illiquid assets like startups or real estate, it's not so easy and quick to change it into cash or exit it. And to do it, for example, I would need to find a counterparty, so someone who wants to buy shares in my startup or real estate special purpose vehicle, and it might be cumbersome. It might take time, and in the end, to finalize it, I would need to sign with him a contract, perhaps even pay a visit to a notary in case of Poland, or have some lawyers engaged in these transactions. So it's a pain investor in illiquid asset has. Of course, the alternatives are assets which are available on public exchanges, like blue chip stocks, for example, or shares. These are very liquid, but there are also less liquid, like penny stocks or some stocks on those exchanges, which have smaller liquidity. And now we have a technological option to provide this liquidity potential or mechanism to very small or very illiquid assets like real estate or startups ventures, in general tokens. Assets available on public stock exchanges have to come there somehow, and these companies which are noticed on public stock exchanges had to bear costs to get there and keep bearing costs of being available on the stock exchanges. So for quoting or some additional service of brokerage houses, shareholder registers, and all of that accumulates to some significant monthly fees, which actually decrease, let's say, the cash flow available to that entity, and it wouldn't make sense for small projects, small real estate portfolio to be listed on a stock exchange. That's the problem with traditional finance. And now with blockchain technology, asset issuer does not have to bear nearly any costs of the capability of secondary trading on decentralized protocols. That's a huge advantage. And what's even more interesting, potentially the issuer can even make money on trades on his assets. Okay, this episode starts to be a bit too long, I guess. So in next one we will cover the question why not centralized exchanges and why decentralized exchange protocols are so much more tempting in some cases, and what are these cases. Let me know in the comments below what thoughts or questions come to your mind. And if you like this series or video, please share it, like it, and spread the word. Thank you, and see you later.